Knowledge is power. That's a great statement and will continue to ring true for the foreseeable future. But in general, people ignore reality. Even when they seem to know the truth, their decisions are often swayed by emotion. They override the process and find themselves taking risk or walking into a bad decision. If we study every single day, speak with the right people, seek out those who are ahead of us on our path, we can be well informed and hopefully find ourselves in a good position. You came here for the truth, so let me unveil that for you. Today we're going to talk about gold. This is something that I like to get into on occasion because I know I have so many subscribers who are interested in gold, not just on one level, but as a measure of risk. When you look at the markets and you see what's happening with gold, oftentimes this happens to be a bellwether. So we can pay attention to it even if we're not necessarily going to invest in it. So let's begin. The price of gold. When you see the price of gold, the spot price, this is a value assigned to the commodity through the futures exchanges. Although relatively close to what you would get if you bought or sold at a dealer, quite frankly, it's not the legitimate value. What you are seeing with the price of gold is not the actual value of the metal. It literally isn't. We are talking about something that is a physical commodity. When you're talking about a stock, when you're talking about VIX futures, these are things that are not tangible. But when you go to buy or sell, it all depends on the current supply and demand. There are many factors here that contribute to what you will pay or what you will get paid. Gold, like any other asset, is under heavy manipulation from computer algorithms. Gold is simply in its own world in this regard, and GATA has extensive detail on this subject, breaking down exactly how the majority of what we see today is really not an accurate depiction. They have really done a good job documenting this over the years, and if you're interested, if you haven't seen them already, which I'm sure you have, then definitely check them out online. Gold in a portfolio. I'm asked about this all the time, practically every single day. I don't want to touch on it here. Gold's price is really insignificant. Those who follow the principles of sound money understand that having gold in a portfolio is rather essential, the percentage of which is debatable, but the inclusion shouldn't be ignored. Price fluctuations should be entirely ignored. Instead, gold should be accumulated when prices are relatively low historically and passed down generation to generation. This allows wealth to remain in the family in addition to adding to security and inflationary protection. Look at what cultures of the East do. They are not buying gold and then selling it 3 months later. They're not buying gold ETFs. They are doing so to keep wealth in the family. They give these different coins and high carat jewelry during weddings and other ceremonies. And these traditions have lived on for a very long period of time. But they're not doing it because they are necessarily thinking that this is going to go up in value tomorrow and so on and so forth. It is simply something they do to keep money within the family and have it passed on. The vast majority of people that I have spoken to over the years, whether they are in the financial industry or not, they generally regard purchasing of precious metals as being completely unnecessary. And I'm talking people who have been managing money for years and years. They don't want anything to do with it. Why? Because they're looking at something that cannot make them money. When they trade stocks, mutual funds, bonds, and so on, they're going to be able to make a commission. If they sell a particular product to you, they make money. If you buy a certain product like gold or silver, physical bars, they're not going to make anything. This is why it will never be a recommended product from these people. Now, the percentage you have in your portfolio, some would say 5%, some would say 10%, others would say much, much higher. The percentage, as far as I'm concerned, it's not important. But to ignore an asset class entirely, that is a very big mistake. Gold can be purchased in several different denominations, but in general, smaller is better. I always agree with smaller denominations being a very intelligent thing to do, particularly if you need to sell. Because somebody might say no to you if the denomination is too large, but generally if you bring them into the smaller ones, you would have an easier time. This is part of the questions I get all the time here, and it's a fact that not all gold is created equal. First of all, gold stocks are not gold. There is no exception. If you are purchasing a gold mining stock, this is a stock, not gold. While it might benefit from the price of gold and might be a great investment, it is not gold. A gold ETF, while it might be claiming to be holding gold, still isn't gold. It doesn't meet the requirements of money and must be viewed in this way. Non-allocated metals cannot be gold. If you do not personally have any claim to the gold, it is not true gold. Gold certificates are not gold. It's just an IOU. That's basically everything I wanted to touch on here. You have to understand the difference in a gold investment and gold. Real gold? There have been numerous reports of people unknowingly purchasing fake gold. Tungsten, which is similar in weight to gold, can easily be made to look and feel exactly like gold. Buy from a reputable source that will scan the products to ensure that they are in fact real gold. Many people are probably holding on to tungsten bars right now, and this goes from the top to the bottom. We're talking about a very big scam that has been going on for a little while. Make sure you do your best at trying to find a reputable source. The asset classes. There are 4 asset classes. Understand each and every one of them. Most people have a personal residence and perhaps a 401k. That's pretty much all of their wealth if they're lucky. Their personal residence is not an asset at all, despite what they've been told. So they are left with exclusively paper asset. That's it. They have one investment asset class, and that's all if they're lucky. People need to fully understand the basics of the monetary system and then expand their horizons on all asset classes and the pros and cons of each. There might be a time to purchase one asset class and might be a time to completely avoid another. But in general, if you accumulate over a period of time, over decades and decades, as things move within these cycles, you can then take that wealth and pass it down. Some things are better to hold for longer periods of time. Other points in time you would actually want to reduce your exposure to certain assets. It all depends. This is not a full comprehensive type video on the subject, but I wanted to touch on some of the points that I am asked all the time around gold and precious metals. Of course, everything that I talked about here for gold also applies to silver in general. So I just wanted to mention that. That's all for this video. If you found it informative, please hit that thumbs up button. If you have a comment, an argument, or anything, then put your comments here below, and of course, let's have a discussion. If you want the financial education you were not taught in school, these 2 books have everything you need. All the details from A to Z are located right here. Check it out at the link in the description. If you want the audiobook, that's available at themoneygps.com. This video was part of the e-course. I've got a free e-course. Check it out. I will put the playlist here. Click on it and I will see you there.